Good afternoon, everyone. My name is Anne Garcia. I'm a real estate agent with Oak and Kia Realty, and I have here Jesse Malek.
Hi,
Jesse.
everybody. Yes, I work with Modern Mortgage, or you could also look us up as Axiom Mortgage Solutions.
Yeah, so we're here today to talk about some first-time home buyer seminar. And we're here to debunk the most common myths about home buying, pre-approvals, credit health, and a home buying process. Why don't we start with some of the common myths that we hear about buying your first home or buying a home in general?
Yeah, so I mean, the most common one that I get is basically the down payment myth of that you have to have 20% to put down on a home. You can actually buy a home for as little as 5% down. So that's a big discrepancy in the marketplace there with what people are kind of thinking and versus what is actually the reality.
Exactly, because I've heard that from another client in the past that they were told they need to have 35% down. And we are here today to get everything cleared up so you can get to homeownership sooner than you expect. Why don't you talk about pre-approvals? What are they and how important they are?
Yeah, absolutely. I mean, pre-approvals are probably the first thing that you should be doing when you are looking at buying a home. And you should actually be getting a fully underwritten pre-approval. So you might see online that you can go and get just a quick pre-approved in 10, 15 minutes. And basically what that'll do is you'll put your income in there and it'll kind of spit out, this is what the computer thinks you can buy. But that's not actually what you're gonna get pre-approved for most likely. So if you do a actual pre-approval that is fully underwritten with somebody like myself that's a mortgage broker or agent, what you're gonna actually do is fill out an online application. That's gonna put all of your information in there. And at the end of it, it's gonna ask you for some documents. If you're just a regular employee, it's basically just gonna be a T4 and a pay stub. And then what we'll do is we'll take a look at everything, make sure that everything is accurate, and we'll send it off to a lender. And they will actually take a look at all of that information that we've sent in, including your documents, and then they will give us back a pre-approved amount. And basically, they've looked at everything, so you know that you are good in terms of what they've sent back. As long as you don't change your employment situation or take on any more debt, that's basically what you're going to be pre-approved for.
And with the pre-approval, does that come with the interest rate that they are going to be getting, or how does that work?
Absolutely. So one of the benefits to doing a pre-approval is that you're actually going to lock in an interest rate with the lender. So depending on when you do it, whether you want to take a 5-year fixed term or a variable or maybe even a 3-year term, which we're seeing a lot more now of lately, it's going to lock that rate in with that lender for 120 days. And basically we know for that period that that's the highest that you're going to end up paying. So if rates go up, well, you're good because we've got you locked in at this lower rate. And if rates go down, well, obviously once you purchase something, we're going to apply for the lower rate. And we can actually request that they drop that rate down for you on your pre-approval.
Okay, that's all great information. So with that being said, credit health, how important is credit in an application, especially for a first-time home buyer?
Yes, credit is probably the most important factor. Obviously, you have to be working and have the money for the down payment. But your credit's going to determine whether or not you can qualify at a prime lender or if we have to go to an alternative lender. So if you can qualify at a prime lender, you're usually going to need a 640 or higher. Some lenders will ask for a 680. But if you're anything under a 640, then you're falling into the alternative side of lending, which is a little bit more expensive, requires a higher down payment, unfortunately. We do have some strategies to get out of that, like adding a cosigner to keep you on the A side, but unfortunately, they're pretty hard and fast on those credit scores.
With regards to credit, can you share a few tips on how to improve your credit and how to get you going into getting into the prime A lending side?
Yeah, absolutely. There's a few things that make up your credit score. The one main one is your credit history. So a lot of people, when they think of, I'm going to try and improve my credit, they're like, I'm going to pay off this credit card and I'm going to cancel that credit card. That's the actual wrong thing to do, because what you want is you want to save that history. As soon as you cancel it, it takes out all of those payments that you've made on time, and you should actually just leave that account open, because that will lead into the next one, which is credit utilization, which is basically how much of that credit have you used. And that one actually makes up 35% of your score. So you can kind of look at that as basically, if I've got a $1,000 credit card and $500 owing on it, I have a 50% credit utilization. So you want to keep that under, they look for under 35, and that's 35%, and that's really going to push your credit score up.
Another question that I've had, or I've heard from the marketplace, is that you gotta have 2 cards. Is that true in terms of credit card, or is it better to have multiple cards?
So they want to have a good mix of credit. So just having 2 credit cards is basically showing the same 2 types of credit, right? So 2 credit cards is better than 1, as long as you're not maxing out those credit cards and you're making those payments. But what is better is to have a good credit mix. So you want to have a credit card, maybe a car loan, a personal loan, even a student loan would help. And because they want to see that you can manage different debt obligations.
Sounds great. So one last question. Sorry, I have all the questions. For student loans, is it true that you can't get a mortgage if you have a student loan?
No, that is definitely not true. What we do have to do is include the payment in the debt calculations. So having a student loan would actually lower the mortgage that you can qualify for a little bit, but it does not mean that you cannot qualify for a mortgage at all.
Okay, thank you very much. Those are all amazing answers, and we've definitely learned a lot. Now we're going to tackle the home buying process. So a lot of people, they start from house hunting right away, but there are actually steps to make it easier for you and less stress-free. And we're here to share a bit about those steps. We'll talk a little bit about the process in 10 steps. And the first steps really is to determine your budget, to assess your finances and establish a realistic budget for your home purchase. Consider factors such as down payment, mortgage affordability, additional costs like closing fees, moving expenses, and maintenance. And the next one is obtain a mortgage pre-approval. Just like what Jesse mentioned, it is very important to get pre-approved, not just online, but through a mortgage broker, so that you can input your documents and they can assess your debts and your income and get you the actual number and the actual rates.
Absolutely, and that's really going to help you with your budgeting as well, because you're going to know exactly, okay, if I buy a $450,000 home, what's my payment going to be, right?
Right.
So that makes it a lot easier to figure out what you're getting into.
Exactly, because you want to make sure that you budget how much is your monthly payment, because that is not just a monthly payment. You'll have utilities, you'll have insurance, you'll have property taxes, and you still gotta have your living expenses and all that other stuff. And review your credit score to see if you would qualify for financing. And getting financing may take time, so make sure you complete the step early on. The next one is research the housing market. So explore the different neighborhoods that you are planning to be in and the housing options in the desired neighborhood. Consider factors such as proximity to amenities, transportation, schools, and your lifestyle preferences. Analyze market trends and consult real estate agents for insights. And engage with a realtor. So find a reputable real estate agent who specializes in the local market. They can guide you through the process, provide expert advice, negotiate on your behalf when it comes to offer time, and help you find suitable properties. And begin house hunting. So feel free to ask questions about each home. With the assistance of your realtor, start visiting properties that align with your preferences and your budget. Take notes, ask questions, assess the condition, location, and potential resale value of the property. And when you are 100% about getting the house, name your asking price. So this is now where an offer would come to play. So when you find a property that you're interested in, work with the agent to draft an offer. Consider factors like the sale price, of course, inspection, financing, closing date, and your agent should negotiate with the seller to reach an agreement. And your dream home is just a signature away. Unfortunately, comes with buying is a bunch of paperwork. There's going to be a lot of paperwork when you offer, when you purchase with your lender, and when you sign with your lawyer. So don't be surprised if there's going to be a ton of signature, ton of autograph that's going to go out there. And after all, this could be the biggest purchase of your life. So make sure your realtor explains every document to you thoroughly, and you make sure you ask questions. And your realtor is there for you to explain everything, make sure you understand.
Absolutely. And same on the mortgage side. Obviously, buying a home is very expensive nowadays. So you want to understand everything about your mortgage, what your prepayment options are, what are the penalties going to be if you have to sell the property or if you wanted to refinance, and whether that's even going to be possible in the future.
And secure financing and home insurance. So remember, we were talking about pre-approval. Now that you have an agreement signed with a seller and an offer in place, now it's time to get that to the lender. Can you share a little bit more about what happened with underwriting?
Yeah, so basically, once you've gone through that pre-approval process, we have sent it off to the lender and they've looked at your employment income. However, now that you've actually purchased the house, it's going to go in as what we call a live deal. So we're going to have to resubmit all of that to the lender again. So unfortunately, I'm going to have to ask you for more paperwork because they're going to want it dated closer to the time of the purchase. And then from there, they're going to basically review all of the information on the house now. So that's where I get the documents that I can from Anne. We're going to probably need a little bit more up from you as well. But basically, once we send that into the lender, they're going to review it. The underwriter is going to take a look at all the documents, and they're going to send us what we call a lender commitment. Basically, that's their commitment saying we are going to fund this mortgage, and all we have to do is cross off all of those conditions that they have. If we send all of the documents up front, they usually come back with very few conditions, which is basically we're going to need your banking info, sign this commitment back, and oftentimes they'll want to have an appraisal done, which we'll get on that as early as possible. We order that for you, so you don't actually have to order it on your own. Okay. We basically handle everything. All that you have to do is be there when they when they need to come.
Yeah.
So.
All right, and another thing is home insurance. So it's very important to get quotes and have it set up on the day of closing, because no lender or no lawyer will let you close a deal without home insurance in place.
Absolutely. That's one that a lot of people kind of forget about, and they leave it to the very last minute. And the last thing you want is your home purchase to have to be delayed due to basically not having insurance in place. So it is pretty easy to get the insurance in place, so we can definitely help get that sorted out before it becomes a problem.
And conduct inspection and perform your due diligence. So it is very important that once your offer gets accepted, you arrange for home inspection to identify any potential issues or any future maintenance that you have to do in the home, and conduct additional due diligence as well, such as reviewing the property's title, survey, and any applicable zoning restrictions or liens on the property. And closer to the last step is review and sign with your lawyer. So work with a real estate lawyer to review and sign the legal documents associated with the purchase, such as the purchase agreement, mortgage contract, and insurance policies. They will also conduct a title search and ensure a smooth transfer of ownership. And now we're on to the last steps is welcome to your new home. Now it's closing date. Your lawyer will facilitate the transfer of funds, ownership, and the registration of the property in your name. You'll also pay any remaining closing costs, such as land transfer tax, any adjustments, legal fees, disbursement fees, and lending fees. And move in and settle. After closing, you'll receive the keys to your new home, coordinate your move, you'll update your address with any relevant organizations that you're a member with, and you set up your utilities and services.
One thing I will add about the land transfer tax is that as a first-time home buyer, you actually get a $4,000 credit to that tax. So depending on the property value, you may be less than that, or you might be a little bit over that. But it's great that first-time home buyers do get that credit. So your lawyer automatically does that for you. You don't have to send in a mail-in rebate or request it or anything like that. It's just taken off right there at the lawyer, which is great.
Okay. Awesome. So another quick question. With a first-time home buyer incentive with the land transfer tax, if you own a property abroad, are you considered a first-time home buyer if you've never owned a property in Canada?
That's a good question, actually. I actually don't know the answer to that question, so I'll have to look that up for you and get back to you on that.
No problem.
My understanding is that because it would be foreign, that you would probably qualify as a first-time home buyer in Canada. But I would have to double check that for you.
Perfect. All right. I think we've covered all our topics for today. And yeah, thank you, Jesse, for joining on board.
Thank you, Anne. I appreciate it.
All right. That's it.